Good afternoon and welcome to our How to Efficiently webinar series. Today, we will be talking about multi-GAAP financial reporting. My name is Daniel Potočnik. I'm a partner and CFO at CRMT, and together with me is Stefano Soma, a senior technology sales support specialist from Wolters Kluwer. If you have any questions, please write them down in the below section of Q&A, and we will try to answer them at the end of this presentation. Today is a special day. It's so-called Fed Day, so Happy Fed Day. In Slovenia, we say Pustni torek, so Vesel Pustni torek. I hope you will be able to have a donut or two. So this is a custom in our country. A funny fact, for every donut that you eat, you have, in order to burn the calories of that donut, you have to walk for 2 hours. Okay, now please sit back, relax, and let us take you to the journey of multi-GAAP financial reporting. So the purpose of the whole webinar series is to help you make your planning, budgeting, and forecasting processes smoother, easier, and more efficient. Okay, let's talk about basics of GAAP. GAAP stands for Generally Accepted Accounting Principles. This is, it was established in the United States by FASB. So it's called Finance Accounting Standards Board, and SEC, Securities and Exchange Commission. Under the GAAP, companies are responsible for reporting their profitability, cash flow position, and movements of equity. Here in Europe, we sometimes use or call local GAAPs our national accounting standards. In Slovenia, it's called SRS, so Slovenian Accounting Standard, which was established in 2016 and is still in use by some companies. And of course, in Europe, more, I would say, more spread or more widely used is so-called IFRS, International Financial Reporting Standard, which was adopted by AISB and IFRS Foundation. So when we will be talking about multi-GAAP, we will be referring to those. So the IFRS and the local GAAP, wherever this local means national standard. Typically, the GAAP reports, so-called GAAP reports, include at least 3 or sometimes 5 main financial statements. We're talking about statement of financial position, aka balance sheet, as it was called in the previous age, I would say, the statement of income or the profit and loss statement, and in some cases also the cash flow statement, and of course the other 2, statement of comprehensive income and the statement of movements in equity. So on the map on the right hand side, you can see where these standards are mostly widely used or adopted. Okay, what is our challenge for today's demonstration? So today we have prepared a scenario that our company located in Slovenia is still reporting to the regulators by the local GAAP standards, so the SRS. And because we are part of the larger group, which is headquartered in Austria, we need to report to that group by the IFRS standards. And although those 2 standards are similar, but yet they are slightly different in the details. So we're talking about the details of financial instruments, which is related to IFRS 9. We're talking about the difference of the revenues, how it is recognized from the contracts with the customers, IFRS 15, and of course, how the operating leases are treated, which IFRS 16 is dealing with. Then what we need to provide is to be consistent between those 2 reporting standards. So on one hand side, we are reporting to the local regulators by the local GAAP standard, and on the other hand, we are reporting to the group by the IFRS standard. And we need to know for sure that our figures, our amounts are correct. And of course, we do not want to spend too much time, our time on the reporting. So the bearable amount of time spent on the reporting is also one of the challenges. So for the baseline of our demonstration today is that we are storing most of the amounts on one category, which is usually called amount category. We refer to it as a dollar amount. On this category, we are storing the original data. Usually, this is the data coming from the trial balance. So the actuals from trial balance go to the original data in our amount category. On top of that, we define a couple of multiple different categories just for the adjustments. In this example, we are talking about a couple of month-end adjustments. So these are, for example, the adjustments we want to apply at the end of the month. Then we have the adjustments for the local GAAP. These are some things that we can apply for the local adjustment. And for example, IFRS adjustments, which will be shown during the demonstration later. And then when we define different categories, then we provide the additional data to the system with in a form of journal entries, like on a double booking principle. So we provide the debit and the credit side of that journal entry in order to, I would say, recognize this adjustment and store it into the system on one of those multiple categories of the adjustments. And of course, we will track or we will follow the effect of those adjustments on our balance sheet. So this is usually where we track it, either on the balance sheet or the P&L statement. Okay, that is from my side. Stefano, please take over and show us how to do that.
Okay, thank you, Daniel. So let's try to see together how we can collect this different information from our adjustment. So by using our journal and different kind of a category, as you can see here, we are collecting different information to handle our adjustment. So now let's try to see together how it is composed in terms of double entry logic. And as you can see here, we have different kind of the account and the related amount that we can understand related to this adjustment. And of course, we can understand that also this entries is balanced. Of course, we can, I would say, use and add more different, I would say, entries by just selecting in a really easy way the account that we want to use, for instance, to generate a new entries into our journal by just picking and select this one. And also we have to have in mind that we are using the credit and debt, I will say, logic. So we have to balance our entries to do that. After that, we have collected this kind of information. We can see the real impact that is generated by the adjustment by leveraging the reporting side. So using the contribution reporting, we can select into our adjustment pool, which are the, I will say, categories that we want to be focused on that. So in this case, the original data, the month-end adjustment, and the IFRS adjustment. And clicking on OK, we will have in on-the-fly reporting. We can understand how it is composed, I will say, our structure, starting from by our original data, the month-end adjustment, the IFRS adjustment, and in the end, the total adjustment. Of course, we can also change the selection of that and retrieving this information by using the parameter into the reporting side. I'll give you back the flow, Daniel. So let's go back.
Thank you, Stefano.
Okay.
Yes, the bottom line of today's presentation. So this principle that we showed you is most commonly used in the multi-GAAP environments for the reporting purposes, as we showed you today. But This principle can also be used for internal purposes and simulations. For example, we are doing similar simulations for one of our customers where they track so-called one-time effects on different levels. For example, one example is general one-time effects, where they track the investments and the costs. If you consider the cost to be gathered throughout the whole year on a monthly basis, they cancel or they put a cancellation of those costs throughout the whole year on the special adjustment and make it like an investment and simulate what would be their P&L and balance sheet like if they book those costs as an investment. This is one possibility. The other possibility is if, of course, our company is getting some of the COVID state aids, to include or exclude those on the financial reports. So we can see a clear balance sheet or profit and loss statement without the COVID aids or with them. So this is the different approach. Or in some examples, also to include or exclude the effects of the operating leases of the assets that we have in our balance sheet. Okay, if, for example, if you would like to see any of our previous recordings of the webinars, I invite you to go to our website, the landing page of the webinar series, and on the bottom part of the page, you will see the links to the individual recordings. Thank you for joining. I appreciate your time and hopefully see you next week for the automatic currency conversion. Have a nice day.